All countries of the world have to conduct economic reforms from time to time. Changes are introduced when the economic system becomes insufficiently effective or the country is lagging behind other countries in terms of economic development. The Ukrainian economy is also undergoing fundamental reforms and in recent years has shown a positive growth trend. In the last quarter, the Ukrainian economy grew by 3.8%. Forecasts for this year are approximately between 3.5% and 4%. Next year, this number will likely be slightly lower, analysts say. This is because 2019 is an election year. As we know, elections in any country are high risks for investors who restrain their desire to invest money in any given project. The changes that occurred after 2014 and the reforms that are being implemented were sufficient for the country's economy to progress at a 3 to 4% growth rate. In 2012 to 2013, economic growth was practically zero. During the late years under the Yanukovych regime, the economy did not grow at all, so it is quite obvious that we are on the right track. The next serious challenge for Ukraine today is overcoming the peak of debt payments. This is actually associated with the IMF program. This year, next year, and in 2020 is the highest threshold in history of Ukraine's debt payments to foreign creditors. On average, the state must pay back more than $20 billion. Credits that need to be repaid were mainly accumulated by the previous government over the period of 2009 to 2013. Accordingly, loans taken out before the Revolution of Dignity have in fact today created such a huge debt burden. Next year, the national debt that needs to be paid is approximately about $4 billion. The Ministry of Finance plans to attract a part of this sum on the external market through Eurobonds. It has already begun to attract these funds. A part of the funds will be attracted on the domestic market, and the other part of them will come from other lenders who tie their own private funds to the program of the International Monetary Fund. The IMF program for Ukraine is extremely important. First of all, this guarantees economic stability, so the requirements of the donor organization must be fulfilled, experts emphasize. Otherwise, there could be a possible default and a decline in GDP. If the state manages to overcome this peak of debt payments, then from 2021, the volume of borrowings will significantly decline. This in turn means that the growth rate of the economy should surpass its current level. The budget funding from other donors, in particular the European Union, is tied to this tranche. We simply will not be able to manage to deal with more foreign debt payments without such an anchor as the IMF program. First, fulfill the requirements, then the money will flow. This is what partnership relations between Ukraine and the IMF look like today, says Maria Repko, Deputy Director of the Center for Economic Strategy. There is still no financial assistance from international partners, and this in fact came as a surprise, both for the Ukrainian government and from many market analysts who were sure that the next tranche should be received in the fall. However, for this, Ukraine must fulfill a number of requirements, in particular, raise gas prices for the population and adopt the state budget 2019 in the second reading. If Ukrainian parliamentarians are able to refrain from increasing budget expenditures and approving the country's main budget in the current conservative form that suits the International Monetary Fund, then the government will receive assistance from the IMF. These funds will be accordingly used to replenish the gold reserves. When we did not have a program, the Ministry of Finance entered the foreign market in order to take out a loan. They took out not a very large amount and only for half a year and at a very high annual interest rate. This tells us that investors who could buy Ukraine's debts on the foreign market will trust Ukraine only when the latter is granted a loan program with the IMF. Foreign and domestic investments are one of the leading directions of growth of the Ukrainian economy. Since 2008, it has been systematically low in the country, explains Pavlo Kukhta, a member of the Strategic Group of Reform Advisors. Of course, in the pre-crisis period, the situation was better. This was associated with rapid growth in developing countries and with the increase in the price of commodities that these countries produced, including Ukraine. Since the economic crisis in the country set in, structurally low rates of economic growth and low investments have been observed. Today we're observing that this figure has started to grow at a fairly rapid pace. In 2015, this figure hit rock bottom at 13%. Its normal level is about 20%, while the economic boom is about 25%. It was 13%, now it is around 17 to 18%, and is quickly creeping up to 20%. So, if we achieve 20% of GDP, the share of investments, and 4% annual growth of the economy, this is already a norm, and that's quite promising and shows that Ukraine is already catching up with Poland in terms of economic growth. So, the course of economic policy that the Ukrainian government is taking today looks quite promising. It is important to maintain macroeconomic stability and to implement the new IMF program, which is the key vector that keeps the country afloat and will allow it to overcome the peak of debt payments. This requires access to global financial markets and official funding from the European Union, the World Bank, and other donor organizations. In addition, it is necessary to continue to effectively carry out reforms and attract foreign investments.